Yeah, it's funny. I did a bunch of stuff last night. I actually spent quite a bit of time last night going through some stuff, and then I was watching the game and the football game, and then I'm like, you know what? None of this is going to matter if they announce that the government's going to open up. Everything's going to gap up and everything's going to go nuts. And everything I'm doing here is going to be basically useless. And so I'm like, yeah, all right. So I went through the motions and, lo and behold, here we go. The government's going to open and everything's gapping up. And it is what it is, right? I mean, we're almost back to levels we were, just a week or two ago. And, everything's great in the cornfield today. I guess the story of the day is gold up huge today, 101. Bitcoin also. Gold futures up huge. Oil really kind of taking a rest. Bonds really not moving. And then Bitcoin kind of making a big move off of those lows. Not massive, but a pretty decent move. And then, we actually go and look at some of the big tech stocks here on the open, some real massive ones. Actually, I'm in the wrong. Some big massive moves I see. I'll be there. We got, Micron up 4% pre-market. Palantir up 3%, AMD up 3%, NVIDIA up 3%, MSTR up 3%, Oracle up 2%, Mongo, Google, Intel, you name it, everything. NASDAQ's up 300 and something, 340, 350. Amazing what a couple of days does. Even Datadog, like some of these I actually had on the list here to buy, do a little dip buying, but I'm not gonna do that today on this gap up move. It just it's not worth it. It's not worth it. I had Meta on there, for a buy the dip opportunity. I have CRM. I'll go over that one as well. CRM is another one I think that likely. We'll just blow this up because I'm not even going to look at the overall market because honestly, again, the market's up big today and I'm not going to step in front of this freight train today. I'm not going to try and find a short and think I'm smarter than everybody else. I'm just going to step on the sidelines, folks. And I would advise you do the same. All these jackasses out there, I seen them all last night, it's like, dude, shut up. You know what I mean? If you didn't get in on the open last night when we came in, if you didn't just buy something on the open and then just kind of went to bed, you were, you're screwed. You're not don't chase it. Don't be an idiot. But I had Meta on there, and then with this gap up, it's not huge today, but with this gap up, that kind of takes what I was going to do off the table. I kind of liked it where it was down here. This is a point of control here from probably about a year or so. And you can see here there is a lot of, and if I would just clean this up just so that you can. And so what these are, folks, I have a few people ask me, like, what are these lines that you have on here? So what these lines are is these are points of control. Okay, those are points of control on that candle. So for that candle, that is the point of control. And what it does is it actually, I'll show you how I have it set up. This is what I'm doing. I just have point of control. I use the 70% value. I'm doing all sessions. All right, and then I just have the POC, and that's set to normal, and that's it. That's really all it is. And so I'm not putting the profile in, and this is the SVP, session volume profile. So for that session, that trading session, that is the point of control. And what that does for you is it kind of gives you points where the highest amount of volume was at that price during that session. And, you know, I find like, look, you know, I always try to find an angle, and, you know, when they align, or you have a number of these that align in a general area, you're normally going to get one of these bigger. Let me get I have to get my, hold on, I got my paintbrush, man. I got to have that, man. Because that's my whole shtick, man. Without it, I'm nothing. I'm just nothing but a clown, another clown trying to sell something. But normally when these things kind of align with this, it does kind of give you a little bit better or stronger point of interest, right? And one thing you don't know is that going to be a point of selling interest or buying interest? I don't know. You know, anything. I'll take anything. But anyway, that's what those are. But I liked Meta down here at these prices. I liked it all the way down to about $5.90. And what I was going to do with this, but I'm not going to do it today. I mean, again, on a 1% move up, I'm not even going to talk about it. So that was on the list today to buy the dip. So we can't really do anything there. The other one I was going to talk about today was Datadog. Datadog, again, another little gap up here. But what I was going to do in Datadog was kind of against the trend here. And I'm just going to change these. This is the daily. And I was going to short this. You know, big gap up on earnings. You know, they have a bunch of stuff. You know, oh, they're using AI, right? They threw out all the buzzwords that everybody's chasing these days. They're using AI to analyze the data, and blah, 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 right? It's like, you know what, they've been using the same. Look, I don't want to diss on Datadog. Datadog's got a great product. Anybody who uses it, great product. Monitoring, log. They also do, you know, syslog data stuff, you know, and mining. So, you know, I mean, they have a lot of good things going. But again, I don't know, are they going to be able to reproduce this move and this gap up? I don't know. What I would have preferred to hear from Datadog is that they were going to split the stock. That, to me, would have been a huge move. And why? Because what happens oftentimes with these stocks is when they start to get over, I think the number is probably, it used to be $100. I think the number is more like between $200 and $300 now, and even closer to $500. Once they start getting up into that $200 and $300 range, they become harder and harder to trade. And I think it actually, it really does push a lot of folks out of, you know, the institutions don't give a shit because they have the capital, but, you know, for the common folk, it kind of pushes them out of the way. And as I said, I would have preferred to see them split, do just like I was kind of hoping they would do like a 3-for-1 and keep it under $100. But anyway, whatever. But with that being said, I'm looking back to pandemic era pump on Datadog when this thing was up near $200. In fact, I don't even know where the high is. It's up near 200. And we're getting there. And I'm looking at this as this is quite possibly a real justifiable. And if you're a pattern person, this is, in my opinion, a pretty classic, setting up for a pretty classic double top here. You know, I don't think I honestly don't think, and I'm not going to play it, that it's going to roll out of bed and like fall off the map. But, you know, it's going to have a lot of problems, I think, getting up and over this $200 range. And so what I was looking to do here today, there's not really a lot of volatility. You can see we're having a great day. That looks awesome. I don't like to shove that in anybody's face because to me that's douchey. It's douchey. It's douchey, douchey, douchey. I'd rather show you this. I'd rather show you these, the losses, because that is what makes you a trader, my friends, is when you can show your losses with pride. With pride. Because everybody's a winning trader. So what I was going to do in Datadog, I was going to go out to March or January. I kind of like March because I give myself a little bit more time. There's no premium in here to be had, so you can't really sell, and I'm not really going to sell any options here. But I actually might sell some stuff. So what I had in mind was doing a simple put spread, either the 200 or the 195. I kind of like the 195. The 195, 190, because there's a little bit more open interest there than there is up at the 200. And so doing that in March and then adding that on, so I would do this trade, right? It's a 50-50 shot, right? I mean, if it goes down, and again, I'm going in the money here because, right? I'm going in the money because I want to have some intrinsic here because I don't think it's going to just like fall. It's not going to get to 200 and then just fall out of bed and go down 10 or 15 points one day. It might be a bit of a methodical type of grind down. Again, you know, pure speculation, but I got a 50-50 shot. I'm not spending a lot of money. This is going to be more money today. This is probably going to be about $2.75. I believe, but either way, it doesn't matter. I still think it's a good spot here. This is what it looks like on the curve. You got upside to about 197 before you start really kind of getting hit here. You're technically short about 4 deltas, so it's about 4 shares. Again, small trade. And, you know, the bottom is the limit, you know, whatever it goes to, it goes to. And then the other thing is in going out to March, I'm not really worried about theta, right? I'm not worried about that premium burning away because I have some time, right? So that's kind of what I was looking at in Datadog. And actually with this one being up today, this is actually perfect to get in because, right, you want to go short on the up moves and go long on the down moves, right? I mean, again, that's just what you do. So I was going to couple this with a twofold trade. I was going to do this, all right? And you can see what that one is, about it's going to run about 275. Your, you know, max profit on that is going to be about 225, right? Again, now, if you want to kind of juice it a little bit, just widen the strikes, right? Don't take on more contracts, widen the strikes. I always say that. And the reason why you do that is because if I add more contracts, it's going to add more commission, right? And it's only a couple of bucks, but that adds up. So rather than doing more contracts, widen the strikes. So if you want to take on more risk, just go from a 195 to a 185. Make it 10 wide. You want it, and if you notice, my delta doubled. Right? So now it's like I'm shorting 8 shares. You want to take on more risk? Widen it even further. You know, one thing you have to understand about this, a spread doesn't have to be one strike apart. The spread can be as far and wide as you want. you don't even need to do the spread. If you just want to just go, you want to go spend $2,000, that's fine. Go buy the put. Have a nice day. I just, to me, I'm not looking to spend that much, but, the sky's the limit on what you're looking to risk on this. And depending on how wide you make this would determine not only how much delta or how much you want to be short, how many shares, but it's also going to change the amount of capital you're going to use. All right, so just understand that. So that's how I was going to play it on that side. And then seeing that there is really no volatility in here at all. So that's trade 1. Trade 2 was going to be in January. And seeing that I really don't want to sell any calls, because I just don't think selling calls is really going to benefit you, especially with this volatility where it is. I mean, the danger here in selling calls with this at 21, if this does get a volatility spike, let's say it just kind of gets clipped one day, 5 points, or even say 3 points, and some negative article comes in and volatility spikes in this. If you're short the calls, you're not really going to, even though it goes down, you may not necessarily reap the benefits of that, because you're going to get caught in volatility expansion in this stock, and that could be bad. So with that being said, you're probably going to say, well, so then the other side of this is that I look at open interest on this side, and open interest being this high over here just has my eyes sitting here and saying, wow, there is a lot of people betting on this thing going up. And with that, and being a huge amount of call skew in this, makes me think that, maybe I don't sell calls because of volatility. Maybe I sell calls because of this enormous call skew that has actually been built into this stock. So now looking at it that way, I'm saying, you know what? It might be worth selling a couple of calls up here. And where am I going to go? I'm going to go around the 30 delta. And the 30 delta is about the 210. The 210 or the 220. Now, you're going to do a 10 wide in here because they don't offer $5 wides. Once it gets over 200, they're all 10. So if I'm going to do a 30 delta, which the 210 would probably be about the 30 delta today, given that it's up $2, I'm going to sell the 210 at 220. I'm not going to do that. That's what I'm going to do. And I'm going to try and bring in, it's going to be a little over $2. I assume it's going to be about $2.10. So I'm going to do those two trades. And this is what this one looks at the curve. And so I went through all that big explanation because, I'm not selling these calls because of volatility, knowing that I can actually get trapped in here if there's a little bit of a volatility expansion in here. But I am selling call skew. And meaning that, look, the calls are actually overpriced here, significantly overpriced, because there's so many people betting on it, and it's already had just this big, huge gap up. And so now you kind of have the sheep following here at the end, that, even a small adjustment to the downside in volatility would translate into a pretty big move on these short calls. So I'm going to do a twofold trade. I'm going to do the put trade. I'm going to buy those, and I'm essentially going to finance part of that short position with selling these calls. So there's the second trade. So it's the 210, 220. I'm going to bring in whatever. It's probably going to be like 210. I'm assuming. This has got a 70% chance of pop to it, right? It's like shorting 9 shares. And then on the other side, I'm not going to do it as one trade because I really can't. I don't think it'll let you. But and then on the other side, I'm going out to March, and I'm going to do the 195, 190. So and my hope is that I'm only going to wind up spending like maybe 50 cents, $50 on this trade. And then I'll be synthetically short probably close to 10 or 12 shares on the Delta. And so anyway, there's my trade on Datadog. And, I'm not risking a lot. And I could be totally wrong, and Datadog can continue to go on its run here and plow right through this. Like, I'm well aware of the fact that, this could continue to just plow ahead and run through that line like it never existed before, which likely may even happen. But, my hope is where my strikes are, is that I'll be in good shape in the next, 45 days or so. All right, so there's my trade on Datadog. And I would have liked to have been on the other side of that. I honestly would have preferred to be long right now in Datadog and be selling into this. But, hey, it is what it is. I'm not going to talk about Meta. The next one I'm going to talk about here is CRM. And I'm a little on the fence on this one. I actually went and I usually never do this, but I actually went and did some research on CRM. CRM has been kind of a piece of shit. Let's face it. It's kind of been a piece of shit. It's one of these stocks that had a huge run up into COVID. It got slammed, made a comeback, made a couple of and now recently it seems to be kind of on the skids. And I don't know if is it because maybe they missed the AI thing or, and so I went and looked, and I don't really follow them as a company. I just, everybody knows Salesforce, but I think what's happened with Salesforce is that there's so much other competition now. And, they're not kind of the only big player in the game now. There's a big field of players now in this space. And I think the problem with Salesforce, from a company point of view, is they just don't have the technology or not. And really all they're doing now is just servicing customers who've been in long-term contracts now. And I think what they're seeing is that small portions of business that they had that came due went somewhere else. And they haven't been able to, recapture or grow new business as fast. Again, this is just my interpretation. But that is what I feel is going on with CRM. Anyway, with that being the case, I think CRM here is in a perfect spot, or it's trading in a perfect spot to do some kind of like iron condor, because it has good volatility. The volatility numbers in it are extremely good. I'm going to make that yellow. And we're going to go and look at an iron condor in CRM. And this is one I'm going to go out. Now, they have earnings, I think, coming out December 3rd, so in a couple of weeks. So this one, I'm only going to go out to December here. And this one's going to be as simple as you can get. It's going to be one standard deviation. So it's going to be the 200, 195. And I'm going out, these blue lines are a one standard deviation move. And I'm going out 280 to 290. This one I'm going to have to split. I'm going to have to go wider. Again, you don't have the strikes up here, so it's got to be 10 wide. And this is what I'm going to be looking to do in CRM. Now, it's up a little bit today. It's up about $1.50, $1.50. So I might actually even go to the 210, 200. In fact, that's probably what I'm going to do because it is up today. And I'm going to bring in 259 or 260. Probably going to be less than that. It's probably going to be like 250. But needless to say, great stats on this. 67% pop. almost delta neutral, decent theta here, good volatility, IVR, right? Great spot. You know, have earnings coming up too. So this may expand too a little bit because it does have earnings in a couple of weeks. And so that's where I'm going to go with this. You know, I'm not using a lot of capital. And I do have the capability to kind of roll up, right? Take these and roll up, and these and roll down, whatever, depending on where it goes. So that's the other trade that I like here in CRM, you know, and just looking at the chart and how it's traded, you know, look, do I see it going down below 200? Not really. Do I see it going up above, you know, 300 or the top of my strikes here? You know, especially 280, 290, near 300? I don't think so. Expected move, I didn't look at that. Expected move here in December is $24. So I'm right in the wheelhouse, being where I'm at. Right, $24 there. Right here. Right there. Okay. And yeah, real simple trade. You can do this in just about any account. You can do it in IRA. It's all risk defined, no issues. And then looking at the chart, right? You look at it. Yeah. I mean, I don't need to sell myself on that one. All right. And so that's another one for you. Real simple. And if you want to go out you want to do December, then do December. I'm going to do January. That's just what I'm going to do. I mean, if you want to do January, do January. I'm going to do December. That's just where I'm going to land. I don't know why I got confused. So you could do either one, but I like December better. I'm not even going to look at. And then the other one here is ClearSpark. And, you know, this is another one that I kind of looked up. And I traded it a couple times. I looked. I didn't think I ever did. I think like once or twice I traded it. And I looked here and I'm like, wow, this thing's a piece of junk. You know, reverse split. You know, and then here we are at $16 here. I guess the more important thing here is that when I look here, it's got decent volatility. The price action's been okay with it. And it seems to be in a space that's hot. Now, whether it stays that way or not, I have no idea. But, you know, good volatility here. Options seem to be priced okay. You know, very tight. Nothing real wide. You know, 5 cents or so. So really not that bad. You know, so I was looking for possibly doing something in here, either in December or January, and doing some kind of, you know, small little put spread to just get maybe long. Margins in here are actually really good too. If you want to do a strangle, you can. The margins in here are not terrible. If I were going to do a strangle, I'd probably do something like this, like the 1522. I'd probably do something like that. So anyway, with that being said, I don't know exactly what I'm going to do, but I think I want to be short some premium in here and do something in this because it is kind of moving around. And I want to try and take advantage of this kind of elevated volatility in this stock here and now. All right. And that's it. Now, I don't know what I'm going to do, but, you know, just, you know, you can do the same thing. You don't need to see exactly what I'm going to do. I'll probably show it to you tomorrow if I do something today. But again, I don't know what I'm going to do. I might do something like this, but I may also do like a ratio in here. A ratio probably wouldn't be bad. Easiest way to do a ratio here is to come here, go to ratio, Where is ratio? It should be in here. It used to be in here. Cover, calendar. Here you go. Ratio, you go short, put, and go. I'd probably do something like this and do a ratio trade. All right, so either one, either the strangle or the ratio. I like the ratio because I don't know. I like the ratio a little better than the strangle, but again, and the reason I don't like the strangle is I don't really like being short calls in a stock like this because, this is one of those stocks where something can come out, Wall Street Bets or whatever, whoever it is, some, some group comes out, and it's got a big short interest, and all of a sudden, they come out and say something, and the stock goes up $3, $4, or $5. Gets a quick volatility expansion, and then I'm stuck in these calls that I'm going to be rolling for the next 6 months. So anyway, that's just, but again, you do it anyway, but knowing what can honestly happen. But anyway, that's it. That's all I had with and the other stock I had, like I said, was Meta. And last but not least, an ETF, the XBI. The XBI is the Spider S&P Biotech. And if you look at this short term, since April of this year, this thing's just been an absolute monster. But if you look back where this was even pre-COVID, is that pre-COVID? Not during COVID. This thing was up near 180, 190, 175. And so, with that being said, even though this has had this big, massive run here and we've gotten a bit of a pullback, I think there's some room here. I think there's definitely some room up to 130. Honestly may not make the run all the way back to where it was, the 170, but I definitely think there's some room for this to run to 130 to 140. And with that being said, it is an ETF, so there's not going to be a hell of a lot of volatility in here, and there's not. Full disclosure, I'm long this already. I think I've even told you. I've actually added to it as well. I have not done any option trades. I own this outright. But I have not done any option trades. So I'm looking at March, and I'm looking to just do a real simple call spread. And the one that kind of attracts my attention, we are up a little bit today. We're up a couple of bucks, so likely won't do it today. I never like to buy anything on an up day. But the strike that was actually catching my attention, crazily enough, is this 120. And I was really contemplating doing this 120, 125 because it wasn't going to cost me a lot of money. And look, I'm going to tell you, it's a flyer. It's $15 out of the money. It's not normally what I do. $15 out of the money. It's not normally what I do. But seeing, this is what kind of caught my attention. Now, I normally like to go against the herd a little bit with something like this. If it was December, I would. But since it's March, I'm like, you know what? And this has got some room. That's about 130 days out. That's probably not a bad, I kind of like that landing spot. So, anyway, it's kind of a flyer, but that's kind of where I'm going with this. And the nice thing about this ain't going to cost you that much money. It's $150. So if you lose, you're going to lose $150. Big deal. You're going to drop $150 going to, an average, like 4-star, 4.2-star so-called, this restaurant is fire, right? Your Instagram hype restaurant that, is nothing more than dog meat, Cisco food, presented on a plate fancily. But, that's kind of it with the XBI. If you want to be a little more conservative, instead of doing the spread, do a calendar spread. Do like the March, buy the March 110 and sell the January. All right, and do that one. And that's a little more conservative because you have the capability to roll this and change the trajectory of your trade based on where the price goes. So if it goes down, you can roll this down and make, you see that, and you can, all right. And then if it goes up, you can roll this up and bring premium in. All right. And that is kind of the flexibility of the calendar spread. Either one works fine. So the 110 calendar spread March, January, or the 110 March, 110, 115 March call spread. All right, and that's all I have. That's it. And I haven't even looked at the market. As I said, I'm not even looking at it today. We're up, we're still up 65. Are we going to get a fade today? More than likely, yeah. We're going to open, and we might even gap up a little bit further. But I'm not going to stand in front of this. The Dow surprisingly has not moved at all, which just tells me that the big stocks, the whole move is in the NASDAQ and in the Russell. Russell's having a pretty good day. So there you have it. That's it. So I hope this helps, and then we'll see how it goes. But I think two pretty good setups today overall. All right, have a good one, and hopefully I'll be back tomorrow.